Welcome back. Now, Homechoice has delivered strong full-year results with headline earnings per share increasing over 7%. The homeware retailer was mostly boosted by digitization and particularly its Weaver Fintech division. Earlier on, Darlene caught up with the company's CEO, Wibberley, for a closer look at the group's annual performance. Here's that conversation.
The Weaver Fintech has really grown very, very nicely again this year. Much of our headline numbers, revenue, profits up around about 30%, customers up 72%. And what's driven that growth in the business is we're an extremely digital business. The buy now, pay later product that we have through the Pages Now brand is a no-brainer for customers to adopt because it's a free product that lets you split your payments 3 ways and make things affordable at the till. And so they booked 650,000 customers last year, up to 1.3 million now. And those customers come into the portfolio and then we cross-sell them our other products. The Homechoice brand also well loved in the market, and they bring in customers directly for lending and insurance. But the sweet spot is us using the ecosystem to cross-sell those products at low acquisition cost, low operational cost, and retain customers and get them to re-engage and repeat business with us. So very strong growth with Weaver, and I expect that to continue as we found a sweet spot in digitally engaging with customer base.
I want us to just zoom in more on that business. I mean, it's always great to hear of growth, especially in this muted growth environment, Sean. Now, where we also find consumers under some constraint because of higher interest rates as well as that high inflation number. Now, with that being said, how are collection rates looking like on that loan business side?
Okay, well, let me split it in 2 ways. If I talk about the buy now, pay later product, that's actually really aiding consumers in a constrained environment where affordability is a real thing now with high interest rates and the battle against inflation. That product lets them split the payment at 3 ways at the till so that they can afford to buy things now. On the lending business, we ran back our rate of growth. The year before, we grew our lending 29%. This year, we slowed down to 12.5% out of a genuine concern about affordability in the marketplace and general consumer strain. And so we increased our affordability buffers, and we tightened the amounts with which we offered lending to both new and existing customers, all in an effort to manage with the consumer the tougher climate that we find ourselves in.
Now, I want us to zoom into the competitive landscape within that business. And I know you mentioned that you are already using the customer base that's already been there to offer these other products. But how competitive has it been?
Well, you know, all the major banks and many other credit providers offer personal lending to customers. So we have a lot of competition and have had for a long time. And Homechoice competes because I believe we have a very strong focus on our customer, especially our female customer. We try and make our loans very well understood and accessible and transparent, and then available to her despite her busy schedule on her phone 24 hours a day. And that sort of relentless focus on our female customers binds the UX of our digital products so well. And so we've seen continual growth there. And in fact, we manage our growth by just making sure that the credit quality and affordability comes through in our customer base. On the buy now, pay later side, they're the #1 buy now, pay later provider in the country. They've seen exponential growth. They doubled their base last year. There's a lot of demand for the product because it's a no-brainer being a free product that splits payments. And on the retail business, they had to pull the handbrake quite significantly last year. They've reshaped their scorecards. They slowed down new acquisition by 30%. They lowered the retail base of customers by 16%, I believe it was. And they've rebased their business now for growth going forward because in the constrained environment, they needed to take corrective action. And it's great to see the green shoots coming through in their risk numbers and their sales numbers now that they've stabilized and the business.
And that brings me to my next question. I wanted us to touch on that retail business. You have been embarking on a turnaround strategy within that division. Would you say that that strategy has now been completed and then that business is poised for growth?
Yes, I would say that the business is now, it's taken a couple of years, to be quite frank. Their credit numbers are looking very good. They are now booking a quality customer. They have grown out their showroom footprint. They now have 22 showrooms where customers can walk in and touch and feel the goods rather than seeing them only on a catalog. And they've augmented that digital experience, which is a physical experience, with digital. So you can go into digital kiosks. The agents with digital tablets. Customers can go online in the store and make purchases. That's working really well, and it's grown the cash proportion of that business to 24%, up from the normal 7%. And the credit performance of those customers in store is much better than our typical credit customer because it's a more purposeful customer in the physical world. That's worked really well, and they're growing their digital footprint. That's 26% of all sales is done digitally. And I believe that this business is now really ready to get back to doing what they do well, which is serving the customer, the Homechoice heritage products, their textiles, which is 55% of their sales. Everyone in their market knows the brand, knows the quality, and desires the products. And I'm very pleased that they've got to a foundation now for growth.
That was CEO of Homechoice International, Wibberley.